What's up, team? Sean from West to Live here, and we're going to do a quick take on something that came out of the Palantir earnings call this past week. Now, before we do anything, I think it's fair to say across the board, stocks have gotten absolutely trashed. It's been a terrible week. It's been a tough go for pretty much everyone in the market, but especially tech stocks. Now, there's a number of reasons for this to happen. I think everyone fell sort of against each other here. So there's nothing here that I'm super concerned about or that this is worse than someone else or someone else. And I think overall the earnings were sort of on par with what I expected. There's been a boatload of videos from a number of people who've done amazing breakdowns. So I'm not going to waste your time making another video to tell you the same things. What I'm going to do different is give you a perspective that you may not be aware of if you don't work in the field that I'm in, which is analytics, consulting, data, AI. If you don't know how those cycles work, sometimes earnings can be a bit hard to understand, or it might even be more positive or more negative if you don't have the background and the impact on what specific things mean and specific motions within the business. So let me show you the motivation, because I think there was an absolutely amazing video done by someone on YouTube who I actually think is brilliant and does far better work than I do, frankly. So I'm going to share my screen to show you what sort of motivated me for doing this. So I need to share this quickly here. So if you don't watch Sasha's channel, it's an awesome channel. I tried to pause it at the most opportune time to, make him look decent here. So if you don't follow Sasha, you should. This is an amazing breakdown explaining why the stock is crashing, what happened with the Q1 earnings. And of course, here's his channel, here's his Twitter. Obviously, I highly suggest you check it out. This is an awesome, awesome video, okay? But here's the thing. One thing Sasha called out that I thought, although it was a great point, and I don't think he's wrong, I just want to add a little more color to this, and then you could do your own due diligence to decide if this is a good thing or a bad thing. But it starts with understanding how commercial sales goes to market in a company like Palantir, because I think that's the missing piece here to understanding why results look the way they do and why they're a bit confusing sometimes to understand. Also, why NRR can sometimes be misleading here. So first and foremost, one of the things that was called out in Sasha's video was that he's noticed over time that when commercial customers do come on board, they tend to be really small, then grow. That's a great thing, right? Sure, in theory it is, if you understand what's happening, but if you don't, it looks as if all of their customers just have awesome net revenue retention, which it does seem to be the case, but what if it's misleading because that first sale isn't what you think it is? So let's start here before we do anything. In the realm of commercial sales, every company who sells software, especially enterprise software, but more specifically, very specific data and AI-based integration software that is only going to work for the time being for very big, large companies with massive problems in and around data, infrastructure, integration, and delivery of analytics, okay? This is important, right? This product's too big and too heavy for smaller customers. They don't have a big enough sales team to manage that, nor do they want to. So I've done a ton of due diligence since I watched this video, and I've called people I know across the board who are doing consulting work, sales work, using the products today. This is not some fluffy BS of like, hey, here's my opinion because I did 30 seconds of work. I know this industry like the back of my hand. I work in it full time. I know who to call and who to talk to for these kind of things. So here's the deal. When you switch over from a federal government in military business, it's a huge shift. That business in and of itself requires what's known as RFPs or RFQs, okay? The government says, we need an AI tool. They release a request for proposal and then a request for quote. A bunch of customers will bid on it. Then they decide who has the best fit based on what they need. There'll be a race to see who the winner is. Then they'll get a price. Then they'll sign a contract. So when you do a deal with the government, military, federal, whatever, it's everything all at once. You're winning the deal. It's professional services and installation integration. It's the licensing, it's a long-term contract, etc. The commercial business where you're selling B2B, business to business, is not like that at all in this space. So first of all, we have to understand the TAM. The TAM is the total addressable market that Palantir can even go after. So for the sake of conversation, and I've called several people, but let's just assume because of the size of their sales team, which is not very large, they have to focus only on the biggest possible companies who can also afford to bring on, a high-end solution with a high price tag like this. So the entire world of B2B starts like this. When we start to think about who can actually afford it, it gets really small. Now from even within that small, call it Fortune 500, maybe Fortune 250, we have to think about how many companies can these sales reps functionally actually manage to build relationships, then interest, understand problems, understand business cases, act on those business cases, deliver proposals and demos. Then they have to do very heavy work on understanding how it's going to connect, how it's going to work. This is very deep technical discovery on the sale. So through all this process, what then happens oftentimes in the commercial space, and I want to be clear, if you don't do this daily within like the AI, machine learning, and data platform world, you might say like, well, that's not true. Customers buy software all the time. They do. The considerations for selling products like this is so deep because you have to understand all of the points that it's going to touch, how it's going to get worked and delivered, and then how you're going to deploy it into production. And production means the real world environment when actual people are using it, you're getting results from it, it's driving your business. So now we have that sort of smaller market. Once we realize how few accounts those individual sales teams can handle, we have our serviceable, addressable market. It's a much smaller universe of potential customers. Now, those customers can't take risks by spending 10, 15, $20 million on a solution, right? They just can't. It doesn't work that way in this business. So oftentimes what will happen is, rather than signing on for a big deal, they'll sign on, and I'll give you a couple different names for it and explain the differences. They'll sign on for a pilot, a POC, or a POT. Now, a POT is a proof of technology. This essentially is sort of turning things on, connecting some data to it, maybe doing some work on the platform yourself or having a partner do it with you, essentially proving out like, look, it does functionally connect. It does actually do what it says it does. The AI is actually live and works. A POC is a bit deeper, right? A proof of concept is to say, I'll give you an example. I want to predict outcomes from my hospital. And I want to know how many patients are likely to come back after surgery, something very specific. Now they're going to go and they're going to take all the relevant data, connect to the sources, run it through the machine. Now, keep in mind, it takes time, even for a POC, to decide the factors, the measurements. We need to have an economic hypothetical outcome and what the impact on business will be. This is sort of your business value assessment of, if you buy this, you'll get this in return. We then have to have defined success criteria. Defined success criteria are the things that say, hey, Mr. and Mrs. Customer, if I hit these key points, I will now buy an entire solution at the end of this project, okay? This is all of what it is. The pilot is the word I'm going to use generically to wrap around all this. A pilot, and oftentimes a paid pilot, is when they pay for a certain amount of licensing and maybe some access to professional services or a partner or implementer to help stand it up. Pilots are typically, give or take, about 6 months. The theme here being the first month or two is really that, that deep work to get things built out, get data connected, make sure data looks proper, standardized, and is workable and actionable. Then we're going to run analysis on it. Once we have that analysis, we're going to start to work to iterate on that. Our first couple passes, the data might come back not looking great. The responses aren't what we expect. The model has to learn from itself. The problem is it takes time to do this. The models need more data to come in to keep becoming more statistically relevant and have outcomes that are more tied to the hypothetical economic factors that drive towards that success criteria. I promise I'm getting to the point, but you have to understand, if you don't know this much about it, you can't know what you're investing in. So what will happen oftentimes, especially with a company with a flat sales organization where there aren't really VPs of sales all over the place, it's typically a bunch of account executives or sales reps who probably have team leads or some low-level type of position like that, senior folks, so they're good, but just keep in mind, it's not like structured like a huge company. So their goal within their small set of accounts is to build interest as fast as possible and then try to get them on pilots. So those pilots might be 5, 10, 15% the size of a real deal. So this is where we stop and turn back to earnings and explanations in and around the sales in commercial for Palantir. And I want to be clear, you might think this is very bullish. You might think this is very bearish. I'm not presenting it either way. I'm just giving the details, and I'll tell you what I've done recently, not because I want you to copy what I've done. In fact, I don't want you to copy what I've done, but I just want you to be aware of what I've done to take advantage of this knowledge. So let's say 25 reps are on staff and all 25 sign up a customer for a 6-month pilot at 10% of the cost of the whole licensing. Well, when they report that, it's going to look like it's a new customer who is paying us. Those are facts. It is a new customer. It is under contract, and they are in fact paying you. But it doesn't mean that they're going to actually make the purchase at the end of 6 months. We don't know how big that purchase will be. So the question then becomes, do you believe as an investor, and this is where you have to use your opinion. It doesn't matter. 1,000 people can watch this and criticize me and say I'm wrong. Fine, whatever. But I'm telling you, if we're looking at net revenue retention as a primary factor in the success of a company, are we looking at net revenue retention in terms of purchasing after a pilot, or are we looking at it after a full 1 year contract, for example, is then renewed for more money? That's what I need to know. And that's what I have to know if they're growing the right way. Because what if 25 of those pilots, only 10 actually stay on past the first year, but because they buy 10x the pilot price, it appears like commercials are really growing. Because at some point, every time a customer says, nope, this doesn't work, that small serviceable addressable market shrinks and shrinks and shrinks and shrinks. Now, with time, the hope here is they're going to get a bit more out of the box. They're going to have more modular solutions, which means that small market can start to grow. So it's not just the Fortune 100, it's the Fortune 250, then 5, then 1,000. Then they have a small team from mid-market and GB, right? Of course, I'm going to sneeze, excuse me. Allergy season. So that's what I want to get across here is, if you don't understand fundamentally that companies like this are operating on a pilot or POC type of sales process, NRR can get very skewed and you can really misunderstand what those numbers mean. So when you see something like 4 new customers, 10 new customers, well, do they sign up for only 5% of what it might have cost to be a real customer? And how many customers can you stand to lose before you sort of run out of your addressable market? Now, of course, in theory, Palantir does amazing work. This is not a reflection on whether I'm bullish or bearish, but just the product itself is a really good product. And they're still having growing pains on the commercial side. I'm not making any excuses for them, frankly. I'm just saying, like, that is very obvious that that's what's happening here. So that's the thing that I need you to understand is some of these NRR numbers could be affected by the fact that we might be looking at pilots and POCs as being net new contracted customers. And then that NRR number being so big might simply be because we're converting a 10% pilot into 100% purchase, which, by the way, I'm not saying that's a bad thing. I'm just saying, where's the line of differentiation here between like full price, big new customers coming on board? We don't really know that. So with that said, I want to give you a quick take on how I'm playing this personally. So I think a lot of people know who watch my channel. Several months back, I had called and said I was going to start marrying puts to all of my positions, which meant that I was becoming bearish on the stock. I still wanted to hold my position from an equity perspective. But what I did is I matched up puts against my holdings. And on the way down, thankfully I did that. I was able to take some considerable profit out of the market on that move. When the price dipped the other day to around that $8 to $7 range, I then jumped back in and bought $7.50 calls and call leaps. So some short-term duration, some very long-term duration. Obviously today it looks like the price is bouncing a little bit. I have no idea if this bounce is going to stick around for the whole day or if in fact it's going to be here next week. Okay. But I did want to call this out that on top of holding the equities, I'm trying to manage myself from a risk perspective to both profit on the way down and then really, really profit heavy on the way back up again, since I feel like we're nearing at least what must be close to a bottom at this point based on price. So I just want to share that transparently that, I'm playing this both ways. So if you watch this and think like this guy's crazy, he's a bull no matter what, well, that's not true. And if you watch this and think this guy's crazy, he's a bear no matter what, well, that's also not true. The one thing we're preaching here constantly and always is you must do your due diligence and invest based on the information you can gather and aggregate about a company, and then make your buying decisions. And frankly, even when I do all of that, I still can be wrong. That's why I hedge. So if you have huge positions and you're YOLOing into Palantir, hey, that's on you, but protect yourself. If you're all in at 15 and this thing crashes down to 7, how do you ever get out of that hole? Do you wait 10 years to make your money back? Well, you're going to take 10 years to be back to even. That doesn't make sense, right? So make sure you have a strategy for how you're going to work in and around this. Final point I want to make is investing in things that you don't truly understand is okay, right? I know like no one's going to be professional at everything, but you can't get one take or two takes and think that that's all in. I know everything I need to know. You have to do some work to understand the markets that you're in, the way they go to market, the way teams to deliver and develop in and around that process. So I'm just going to leave it there. Have a great day. I hope things are going well. I hope the market stays green today. Otherwise, thanks for watching. Hope it was helpful. If you have questions on this kind of stuff, the sales motions, analytics in general, and AI, or even you just want to understand technical analysis, just let me know. I'm happy to do this stuff and go into any level of detail. So with that, thanks so much for watching. Hope everyone has a great day. See ya.